So episode 14 of the FinTech Flo, we took a little break for August, enjoy the summer a little bit. And Mike, good to have you back. Stefan, I think, is trying to gun for your role, maybe.
I'm a little concerned about that. How do you feel it went?
I purposely got him a red pop filter to put on his mic just so it looks super silly. And I think he was a little embarrassed by it, so kind of keep him off guard. But honestly, I got to say, to go from controller to now being like a full-time speaker, essentially, he's done the good transition.
Yeah, he's good at what he does. We hired him for a reason. And I can't believe it took us this long to get him actual good equipment. So he sounded good.
Yeah,
so glad you guys took care of that. Our evangelist now has good equipment, so he sounds better out of his home office.
Well, yeah, you think about it. I mean, 500-person company at this point, it's just there's so many parts of the ship that got to get managed, and definitely makes it difficult. But
we were nerding out about materiality before the podcast started, and a microphone for him is certainly not material for us, and that is a $100 purchase that's well worth every dollar that goes out. So, hey, if you are on Zoom a lot and you're working from home, microphones are not expensive, and you sound way better. It comes across more professional, makes for a better meeting. Just buy a $100 microphone, and you'll sound a lot better.
For sure. So before we get into it, I just wanted to kind of get your take. When it comes to the summertime, I feel like it's a lot of time people take a vacation very often. Are you more of a fan of like an extended weekend sporadically or over the course of like a longer period of time, just getting a bunch of Fridays and Mondays? Or are you more like, I want to take my vacation in a chunk, full reset, and then kind of come back?
Shorter ones are easier for me. So I like a long weekend or maybe like a 4-day weekend, something like that. Like I was just in upstate New York visiting my wife's family, and we were gone for a whole week, and it's just a week of work cannot go by. So I find myself, always looking at my phone, always thinking about work, slacking with people, that kind of thing. And so it's never like truly a vacation unless it's a shorter period of time and I can crunch more quality time into a shorter period of time. How about you?
Sure. Yeah, I have not done an extended vacation in a while. I feel like it's something I do need to do. I feel like it is important every once in a while to get like that full reset where you do disconnect and unplug. But I've traditionally been more of just like, let me just get an extra day here, an extra day there. I usually get antsy after like I'm off for a couple days anyway. And I'm like, I feel like I'm being unproductive right now. And I don't know if that's a personality type thing, but that's how it is for me.
I agree with you on that one. And yeah, the idea of me disappearing for a weekend and actually disconnecting just probably isn't reality. So I'll accept that. Plus I love it. I don't want to be gone for too long. I love FloQast. This is amazing.
Amazing. Yeah. All right. Well, with that being said, let's get flowing. All right, so this is the FinTech Flo, episode 14. We're closing out the summer. I am Drew Carrick, your co-host.
Not going to go the rapping CPA?
I've been doing a whole branding exercise lately.
Oh, no. My bad. Rebranding? What are you going for?
No, I'm still going to be the rapping CPA, but I finally had this existential crisis that's existed maybe for the last 30 years of my life come to some sort of close of where I now kind of understand how I could just be completely creative in all ways, business and entertaining as the rapping CPA. But on a more professional level, if you would like to hire a consultant for your business, Drew Carrick, CPA, I think is a little more professional.
Got it. Maybe Drew the dynamic CPA.
Yeah.
The multifaceted CPA. You can't peg me down, put me in one box CPA. That's what.
There you go. Nice. I think dropping the "thes" is the key. But what's your new sign on?
Dude, this one's a little weird. I'm technically now Mike Whitmire active CPA after my little brush with suspension there, having to go through all my CPE credits. So back to being active now. That's a good feeling. And I will promptly go inactive again so I can go back to being Mike, the inactive CPA, which I really enjoy.
How long is that going to take?
I don't know. I think I get like a year. I think I'm active for a year. And then when I go to renew, I should know this now since I just went through the entire process, but future me problem, I'll get it sorted out.
For sure.
But yeah, for now, I can, I guess, sign audit opinions and whatnot if I really want.
There you go. Well, we got some of that kind of we're going to touch on today in this episode. So kind of jumping right into the stuff in the accounting world, accounting today. FASB released a standard on joint ventures, and it's good to see FASB hard at work this year. I feel like between all the different elements of chaos between crypto and AI and NFTs and all that sort of stuff, all of the accounting boards have just been, they've been hitting the pavement and they've been grinding it out, perhaps working more than our government does. And So one of the things that this article said is there has been diversity in practice on how joint ventures should account for contributions it's received when it's formed. And some ventures initially measure their net assets at fair value at the formation date, while others initially measure their net assets at the venture's carrying amounts. And so the goal of this is to create some sort of consistency. And so I thought this was kind of interesting because, when you're a partnership, you're actually co-owning a new entity, and the joint ventures is kind of just going in on a project. And I was trying to wrap my head around like what exactly this is and how it sort of looks. And that's when I sort of realized that it's this notion of, if you have two different entities valuing this joint venture in their own way, you're going to have a balance that doesn't reconcile. And there's nothing accountants hate more than something that doesn't reconcile.
Yeah. I'm always a fan of consistency. That should be, the treatment should be applied. I can't tell you, maybe we can have a philosophical debate on which one is accurate, the best approach for it. But anything that drives more consistency, I think, is exactly what we should be doing in accounting. That's the purpose, right? Is to be able to compare financials of different companies. So this feels like an area where joint ventures can be sizable at certain types of companies. It could be like a material part of your business overall. And so to not have consistency here seems like a big miss in the past. And yeah, with all the stuff going on with crypto and everything, like this feels like actually a good use of the FASB's time. And I'm glad they're putting stuff out to start talking about this.
Yeah, so the update is, like you said, it's to reduce diversity in practice, provide decision useful information to joint ventures investors. And the board decided to require that a joint venture apply on a new basis of accounting upon formation. And as long as you just decide this is consistently what we're going to be using to value it, it's not based on our carrying value. You're deciding, well, this is how much we think it's worth. And then you end up with varying approaches. Valuation, I think, is becoming a more important and more significant thing overall. And we're actually going to touch on that a little bit later in this episode as well. But how we approach valuation, that's like the gray area of accounting that I think is becoming a larger and larger area of accounting, and just makes things extremely uncomfortable for, I think, a lot of accountants who are very used to black and white. And that kind of shows you the retroactive looking accountant versus the forward looking accountant.
Oh yeah. Valuations are tough. I mean, there's so many assumptions that go into it. This one hits close to home, the 409A valuation process. We go through, hey, what's the value of our stock options? And the number of variables and assumptions and inputs are sort of wild. And you have to ask an accountant to really review that and understand it's reasonable. That's the job, is to like review a 409A valuation and make it reasonable. A lot of 409As are performed by former accountants. So you're really like making some assumptions to make that happen. So it's never going to be perfect, but it's the right methodology. It's the right way of thinking about it. It should be based on what the fair market value is today. Let's come up with some means of calculating that. Is it perfect? No, it's never going to be perfect, but is it, in the ballpark, directionally accurate, as they say? Yes, valuations work for that one. So I think in terms of which standard to adopt, it should be more on the fair market value, and then we'll deal with the imperfections of the valuation studies down the road, and hopefully they're just not material.
I think the intimidating thing too about that is there's no answer book at the back of well, this is the correct way to calculate this, because there's a bunch of different calculations, and two, it's the assumptions, right? I don't know how many people in Wisconsin are going to buy this product, right? But you got to plug in a number there and somehow justify it. And that gets, it almost seems like accountants are more like lawyers in that case, where you're trying to argue your case and spin the truth.
Yeah, exactly. And so much of it is subjective. And I know the 409A one well, right? So that's kind of where I can kind of go back to that one. And you're looking at what stock market volatility, what are comparable companies. And to know what a comparable company is in software, you got to, there's several layers you could go. You could sit there and be like, well, also, you're a SaaS company. FloQast, you're the same as Salesforce. What's all that different? You're a SaaS company. It's like, wait a minute. Salesforce is a little different than us. They're way bigger. They sell to go-to-market teams, bigger footprint. So maybe we're more like a NetSuite. And it's like, well, yeah, I get that that's accounting and finance, but no, NetSuite's an ERP. That's very different than what we sell. And so the comps are always really challenging. And if you whittle it down to try to get the most true comparison, then all of a sudden, a very small pool of companies to look at with whom to value yourself against. Sure. Probably the most accurate, but yeah, these are the types of things, how does an accountant get comfortable with, well, what are the comparables, and at what point do we stop saying it has to be that much the same? Because I think any software vendor would tell you that they have unique advantages over their competitors, and we're not the same. We're different for XYZ reasons. But for evaluation, you got to cram them all together and come up with some semblance of a fair market price.
For sure. Mm-hmm. So kind of going that into the next one, this was submitted by our very own Chris Ludi as a suggested article to discuss.
Oh, there we go.
More FASB, this time from the Wall Street Journal. FASB approves new requirements for disclosure of big expenses by segment. This is another one which I think is great too, because previously companies usually would split their operations obviously into segments by business line or geography, and they're required to disclose a measure of their profits or losses by operating segment in their financial statement, but don't have to go into much detail about that. And so this was a 6-1 vote to adopt an update that would require publicly traded businesses to disclose significant expenses in those divisions on a quarterly and annual basis, including labor, technology, fees, rent, cost of goods sold. The first thing that kind of comes to mind with this is when you have these like mega entities that have so many different business lanes underneath them, and you can kind of like wrap everything up and consolidate it to present the financials how you want to. If there is a division that's kind of like carrying the weight or another one that's draining all of the weight, it's kind of important for the qualitative investor to know what's the area that's struggling, and is that a symptom of a larger issue? And then on the flip side, of course, is which the area that's really carrying the weight, and is there opportunity to invest more into that area?
Yeah, I wonder why it's only expenses.
Yeah,
why aren't we talking revenue here?
That would be maybe what's one thing at a time. And I think maybe
baby steps. Okay, there's only so much like transparency we can bring at one time. I like this last line here. I'm going to read your notes for you.
Sure.
Overall, this is good for investors looking to better understand how the business is truly operating. Basically, previously it could be called corporate gerrymandering, which is a nice comparison. Okay, so shifting expenses around kind of to this could be really helpful because some, particularly with tech companies, some of them are so large that business units like should be carved out. Like I think of Amazon and AWS.
Yeah.
AWS, if they were carved out of Amazon, would be one of the biggest SaaS companies in the world, but they're not big enough under the Amazon $1 trillion market cap umbrella to be carved out. But that's a meaningful part of their business. If I'm an investor, if AWS has fallen off from revenue, that's a concerning thing to me because that could be the golden goose and has been for a while. I'm sure they have great gross margins on AWS. So I'd love to know what's happening with that segment of the business. But I want to know the revenue side of it. I don't care as much about the expense side of something like that. So I'd love to see this extended to revenue, not to add even more work to accountants' plates, but I would love to see, not just expenses, but revenue. But I think this makes full sense. Like it's hard to argue against more transparency.
Well, I would see also that the audit implication of this would eventually be having to accurately tie the expenses to the correct operating entity. And like, you'd have to actually prove it. Because I can imagine a situation where, I don't know, say CEO wants to spin off a division and sell it, and you want to beef up the numbers there. And you're like, well, can we pull as many expenses as we can out of that division and throw it into another division, right? And that's where you get into that shady accounting, is how far is the controller willing to go with the recategorization of expenses.
Yeah.
When pressured by top leadership to do so.
Yeah, right. Oh no, we don't allocate any G&A expense over to that business unit. It doesn't need it for XYZ reasons. That's really fascinating. Just kind of cleaning up. Yeah, man. Anything that forces consistency and transparency, I'm generally a fan of.
Yeah, the other update there is businesses will have to disclose the title and position of the individual or group that they've deemed the chief operating decision maker, which is something that's currently not mandated of that division.
Okay.
So,
okay.
Thought that was kind of interesting.
In the SEC filings, that gets disclosed?
Yeah.
Interesting.
So it's pretty cool. I mean, I'm so wrapped up in this now too. And again, I'm a little late to the game on Succession, but a lot of the times my personality type is based off of what's the show I'm watching at the time. And I've been like
that seems healthy, Drew.
I've gotten really into I think about when I came on to technically advise for PBC, and now I'm like thinking of like, oh man, what was the technical advisor like? Definitely was working in these big corporations who is showing how the board of directors has this power fight with the shareholders, and that's pretty cool. And then you literally see a scene where the CEO is pressuring the controller of the company to make the numbers look better because a projection. It's a projection, right? And he goes around the CFO to do it, and who's the CFO's on the line, right? So just like, I don't know, I'm super wrapped up in that.
I haven't gotten there yet. Okay, I need to catch up. How deep into Succession are you?
I'm in the fourth season. It's last
season. Okay.
Yeah.
I'm on I think I just started the second one.
Yeah. So the business stuff really starts to take place, and like it just gets your mind firing of like how the intricacies of the elite works at that corporate level. It's pretty fascinating. So I'm definitely, I'll look forward to having a recap when you're finished watching, and we can kind of dissect the different business elements of the show. I think that'd be a kind of cool thing to do.
All right. I look forward to it.
So other things that are super expensive. What this is from Accounting Today was the last meeting you had worth $2,000. We've always talked about how many times are these meetings that could have been emails or could have been a Slack message, but productive meetings have accountability, owners, and outcomes, and how many meetings don't have any of that? It's just meeting for the sake of meeting. And so this is obviously a clickbaity type of headline, right? Which is what is well the done. Last when you have a half an hour meeting and it's got 6 people in it and each person's billing $300 an hour or worth $300 an hour or whatever it is, it starts to stack up. You're talking about $1,500 for those people to be there for a half an hour.
It piles up real fast. And the other one that kills me is when you have consultants in the room who are making an hourly rate. Like I remember that was actually one of my kind of snapping points with wasting time at my prior job and money. Is I remember we're in this meeting before when we were drafting the S1, and we're sitting around this table, and there are probably, no exaggeration, 15 people around this table. Lawyers, accountants, internal employees, bankers, the guys running the book, they were in there as well. And we're sitting there for an hour debating between the words, it was software, solution, and platform. And there was like, which word do we want to adopt as we go through it? And the arguing over those 3, I'm sitting there like, this meeting, it's probably an average bill rate of, let's call it, I don't know, $500 in there. So we spent, that's 15, that was 500, let's call it, we spent like at least 10 to 20 grand when you take employee salaries and all that kind of stuff. It was like 10 to 20 grand for an hour to determine which of the words we should use. Felt like there was a more efficient way to do this. And yeah, we didn't have the ticker like Shopify has. And I love that they do this, show the cost of a meeting when it's on the calendar. It's like brilliant. Now that I should actually talk to Addie, our VP of HR, and see if she can make that happen as well. It'd be very cool to see it on
there we go. We're stimulating change right here on the FinTech Flo. I was going to ask, what's your approach to, like, from those experiences that you have? Because I think every entrepreneur has these array of experiences in their past of like, well, this ticked me off about this company. This I really liked what this company did. This was a bad manager. This was a good manager. Kind of try to bring that all together to put your best step forward. Did you have a best approach for how you try to conduct meetings, or what you sort of the tone that you try to set on that?
For meetings, no, I'll be totally blunt. Like, I'm not great at hosting meetings. I'm very informal. I'm not like great about having an agenda and all this kind of stuff. So I'm not great at it. But when we're running these large meetings that have a lot of people and I know are expensive, I am certainly good at recognizing we got a lot of people on this call and it needs to be stuff that's productive and makes sense to everybody. And there have been a couple times where we've been, maybe a quarter of the way into a meeting and we got 20 people on the line, many VPs and directors and everything. And, I've had to stop and be like, hey, look, I just need to put into perspective. We have roughly $10 million of salary on this call right now. Can we get to something important and like keep that in mind as we're going through all this? And when you say the salary number,
yeah,
right, it like really is like, whoa, okay, that means a lot. So that's one line I've used, but I've only had to do it like a few times in FloQast. Fortunately, people don't call totally wasteful meetings, so that's nice.
So the footnote here to this up-to-date section is Kelly Pope, PhD CPA, and now going to be a Becker instructor. And I just want to give a little congrats to Kelly.
Congratulations, Kelly. Yes. Friend of FloQast as well.
Yeah, so she actually was on call with the president of Becker while here recording the interview that we conducted with her, as well as our True Financial Crime podcast, which we will be releasing later on in the year, which is hosted by her.
Were you hanging out with her like when she got the offer?
I don't know if it was the offer. She already knew this individual. I'm sure they had been discussing it. I don't know if this was just the formality or the like, we're excited to have you on board, some sort of discovery call. But I remember she took the call from the office because she had texted me saying, hey, I'm hopping on with Becker. I just need a half an hour of Wi-Fi. Otherwise, take it from the hotel. And so got her in, all set up.
That's very cool. Well, yeah, congratulations. She's a super engaging personality. She's great at explaining things. You worked with her really closely, but even from my perspective, like she seems like a great pick to go in and be one of the instructors.
Yeah, she knows her stuff. She knows her book in and out. The stories are just fascinating. It was an engaging conversation through and through. I think everybody's going to be excited to hear it. And for anybody who's listening, who hasn't signed up, where the interview is going to be on Take Control, hosted by FloQast. So I definitely recommend checking that out. It's hosted by myself or moderated by myself. And we talked through her book, Fool Me Once, which is all about scams and from the $1 trillion fraud industry, which is just absolutely fascinating. So it was a super exciting experience, and it was awesome to get to hang out with her and just mingle and talk life to accounting to everything.
Yeah, I'll replug that one. So our user conference is called Take Control. If you want to join, there's free CP credits, a ton of great stuff. That's on September 13th and 14th. And yeah, Drew is hosting an interview with Kelly. And like I said, really engaging personality. I'm sure it's going to be a great conversation and really fun event. It's virtual. We're going to have about 2,000 people attending, a lot of great speakers, myself included. Matt Wilpers as well. He's great from Peloton. So it should be a good time. So it's free. If anyone needs CPEs and wants to hang out with FloQast, please sign up for Take Control.
Yeah, so then...
All right, and last. Congratulations, Kelly. Very well deserved. Excited to have you in that role.
Absolutely. So perhaps the new Pete Alinto, we'll find out, but at the very least, getting some...
Big shoes to fill. I will say, big shoes to fill. Pete, the legend Pete, but I think they found someone who might be up to the challenge.
Yes, and she'll crush it. And so this is a really cool piece from our Have You Read It section now, which I'm super excited about. This was posted by our very own director of production, Josh Glassman. And, not an accountant, but engaging in the accounting community, which we love and we full-heartedly encourage here at FloQast Studios, getting involved in the accounting subreddit area. And he wrote, "It's so easy to get swept away in the negative aspects of accounting work, which we so often find on Reddit and on social media. So instead, tell us one thing that you love about your job." And this original post got 33,000 views and had a 91% upvote rate.
That's awesome. They say, I don't know, a lot of news, it's like negative stuff resonates well, and that's why you see so much of the negativity out there. But it's awesome to see, and if you go in the accounting subreddit, like you said, rather negative. So it's nice to see like a glimpse of positivity here, and people respond really well to it.
Yeah, and it was cool to I think as long as you put it out there and you give the community an opportunity to just speak their piece, speak their part, and it's just curving the conversation in the right direction, then people kind of come up. And we actually created a pie chart here. In the most accounting way possible. It took the data and we had the number of top level comments by topic. And so, of course, the other category was massive, and I'll run through some of what was on that. But I just thought that this was pretty interesting. A lot of people talk about the paycheck, which I think aligns to a lot of people when I worked in public accounting. Like, why are you working in this industry? And people want to be connected to the money. We talk about it in PBC. Lindsay, the auditor, I knew I wanted to major in accounting because I want to be touching the money. I want to be close to the money, understand it. And then interestingly enough here too, I think just to call it out, is the flexibility and remote work ability. I think a lot of accounting can be done remotely. It's, for better or for worse, not as creative, or it doesn't need to be as creative collaborative when it comes to having a meeting where you got to brainstorm a bunch of stuff on a board. You can meet, you can get your assignment, and then you can kind of go execute your task. And a lot of people who are in the accounting field, that fits their personality type, this is a haven for them.
Yeah, I think we get a little in our bubble, probably on Reddit in particular. A lot of auditors, I have to imagine, are in there kind of complaining about stuff. Much less flexibility when you're on an audit and it's crunch time and you got deadlines. But when you move over into private, there is a lot more flexibility. And as long as it's not month end or year end and you really have hard deadlines, people are generally flexible. If you got to go to a doctor's appointment in the middle of the day, whatever, go take care of it. You can do a lot of that work at night. And then obviously so many people are remote. I back to the paycheck one, I also think it's maybe not necessarily like the size of the paycheck. You can make some more money in other areas, but the consistency and like there are always jobs available. You will have a paycheck if you major in accounting.
Yeah.
I still feel that way going forward with AI. And so it's a great like reason to be in there. Nice to see 20% of people. The next one is fascinating to me. External recognition. Yeah.
External recognition. I think it's just because, regardless of how in-depth people want to go in a conversation with you, when you say I'm an accountant, people are still intrigued because they assume that you're going to that you can help them save money, or you can help them manage money, or that you just have money and so you know how to get more money, or of course help you with your taxes. And I think, and that was kind of apparent on our Man on the Street, which we're almost finished and almost ready to launch, which we'll be excited to share.
I'm excited to see that.
Asking folks, and there's a lot of that money management stuff in there. And so I think there is a I'll be the first to admit it, the license plate on my car here in New York is CPA 219. And it was literally, it was the state.
You're such a nerd.
It was the state issued one. Like, so you have lawyers, they get them, the one that say JD, doctors get them, the one that says MD, and they have one for CPAs. And so I paid the $60 step up to get the license plate that has CPA on it.
Nice. All right. Well, hey, I respect that. I like that it's up there with MD and JD. You know, it's an acronym. So
yeah, it takes, you got to pass some difficult tests to get there. So the external recognition, I think, is, people will commend you for doing that.
Yeah.
And just on your point about the paycheck stability aspect, one of the big categories in other, it wasn't enough to make the top list, but was stability and predictability. Okay. And that can apply both, of course, to the work that you have to do, consistently on a monthly basis or on a recurring annual basis, what it is you have to do. There's comfort in not being blindsided every day that you come into work. Some people live in that. They thrive for it. I'm a type of chaos is a ladder guy, but there's another side, which is I just want to be able to come in. I know on Monday, I'm just going to check my emails and I'm going to get into work, and there's not going to be something that flies at me from the side. I can just do my job and get my paycheck.
Well, if that's what you're into, I don't think that's as true of every single accounting job.
Sure.
And that's based on the type of company you're at. So
yeah.
If the predictability of lifestyle is what you like, I would recommend there's a type of company that's maybe like been around a while, growing steady state, cash flow positive, happy to pay out dividends or pay out their partners or whatever. And it's just like a machine that's going. Predictability kind of goes out the window when you're at growth stage companies or a company that does a lot of M&A. Yeah. That seems to be a really common wrench. Like it's like, oh, we're closing the books. Wait, we acquired that company. We have to do all that. And it's just like, you got a huge project in the middle of your day-to-day job. So that level of predictability simply does not come when you're in like a highly acquisitive company or in a high growth company like FloQast. There's like, hey, we have fire drills. I'm sorry. We need to get some stuff done.
And I think that's why a lot of these recruiters do market towards the accountants who are looking for a more exciting change of pace, specifically going from that angle of like, this is a fast growth startup. You'll have the opportunity to work with senior leadership at different entities and different divisions. And there is that more like, some people get in the rut. If you do the same thing for 2 years, you're kind of like, I'm bored with this. So they market it to those people who are kind of like burnt out of having the rut. They don't want that consistency anymore, but they still have an accounting degree and accounting background. So they're like, I'm not going to go switch into the arts, but hey, this would be a really cool way to like have an exciting new element added to the job.
Yeah, I agree. And they're different personalities. Some people like the chaotic, hectic mess. You and I fit in that camp. Some people love predictability and everything, and to each their own. And you can find both opportunities in accounting, which is pretty cool.
Yeah. So I wanted to go to the next slide, which I think is even more interesting, and it tells a more full and fully accurate story.
Can we just go back to touching on the prior one?
Yeah.
What I hear a lot about what's my favorite part of accounting, I hear my coworkers a lot, actually. Like, I love my team, and I'm interested. It's really interesting to see it's not the top one. I would argue it's the stickiest factor, though.
Right.
Like, it leads to the best retention of a person. They're least likely to quit if they really enjoy their team.
Yes, that is 100% the case. I remember from working in public, it was the bond that you form with the people. Even if it was the shared misery, it was the shared bonding experience that you kind of had. And there's some other categories which I could kind of group in to make that coworkers larger, group number. I just kind of put it overall like workplace camaraderie. You have workplace stories. I mean, me and my friends, we still joke around about like the dude who would only eat bananas, and that was his thing. Like, we like the girl who pulled over on the side of the road to send an audit file, like on the middle of like the New Jersey Turnpike. Whoa. Like these are like stories that you have, which you kind of share the bond with your coworkers on. And then I think, benefits and job perks, that could kind of be part of it as well, the work-life balance, but it is that sort of the workplace environment and stories, and that camaraderie kind of all summarizes into that coworkers.
Yeah, I think that
thing
goes into like the paycheck area,
yeah.
But seeing the coworkers, while it's relatively low, I think it's maybe the most powerful thing you can do. So as a manager, I'm just going to like, hey, as a manager, all these things are great. You want to pay your people well, give them flexibility, recognize them. But if you can build that team bond, that's how you really keep the team together and have a well-oiled machine to get all your work done.
Yeah. People don't quit jobs, they quit bad managers, they say,
Yep.
So that's kind of holds true. So this is the upvotes, actually, which is the tally, which tells you, so that first one, which is about the top comments, that's the people who are passionate enough to like write their response out, and how many people made responses about that topic. This, though, the upvotes, This is telling you how many people engaged or responded. So it's not as strong as like writing out your thing saying, I agree, but it is validating the people who did write it. And so, of
How
course,
did you compile this data?
Got to give a shout out to Josh Glassman, I think, who manually did it.
Scrape through. I saw there were 132 comments. So we're looking at those comments, counting the upvotes. Wow. Respect for Josh. All right.
Yeah.
I'm going to assume it's directionally accurate.
Yes.
Let's do it.
And so, Paycheck at almost 30%. That was loaded with upvotes. In hindsight, I'm thinking that this pie chart should have had hard numbers instead of percentages, but we'll leave it at that.
Automating tasks is really cool.
Yeah.
I love seeing that. Yeah. People getting like this enjoyment out of automating their mundane work. I think that's super encouraging with all the tech we have coming down the road.
Yeah. I mean, that again, a lot of people didn't comment on it, but a lot of people upvoted comments who talked about how automating tasks was the favorite part of their job. And I mean, that shows you the opportunity for accountants to make their jobs and make their lives easier if they incorporate automation into what it is that they're doing.
The people upvoting this one, who commented this or upvoting this one, are the ones who are going to excel in accounting going forward. I couldn't think of it. They're going to do very well in accounting going forward. With
you don't want to make a Microsoft Excel joke?
Yeah, that was totally unintentional. I got stuck, so I'm sorry I did that. But anyway, I think the people who are very into automation and love that as part of their day job are going to do extremely well in the new kind of age of technology that's coming at us. So that's super cool to see that up close to 20%.
Yeah, then you get to some of the more fun ones, which obviously I have to call out the fact that spreadsheets is on there because it is one of our favorite things. And then when I think that's very much so in alignment with when the TV reconciles or balances.
Oh, what a feeling. That little dopamine hit.
Yeah. I mean, that's why
great.
I think that's the addictive nature of accounting that gets people in their early accounting careers hooked on accounting.
Yeah, that's when you've solved the problem. What a great feeling. I remember that moment. Very first time it ever happened, accounting 101. I was like, damn. That was great. I think I want to major in this. That is the weirdest feeling, but it is a great feeling when that thing reconciles. Yeah.
There's also people. Some notable mentions on here was pizza, isolation. Isolation was one. I guess for those who do want to just put their headphones on and get their work done.
We're in the other category now.
Yeah, this is all in the other category. I wanted to list some shout outs. So pizza, isolation, travel and expenses. I mean, that was always one of my favorite things was getting to go to clients or go to different sites, or even when I moved over into a more budget oriented role, getting to meet with the department heads and go through what they were looking for from their budgets, what their strategic plans were for the year. Resource for helping friends and family. That was an interesting one, because there is that sort of external recognition. I think that kind of comes with it when I'm able to be a resource for friends and family to,
makes sense.
Can you help me with this? I had a finance question. Money secrets was one that was written in there too. And then detective work, which is kind of, so it's just all the different elements of accounting. Each one has its thing. And this is a funny one. I'll just bring up air conditioning. I don't know who doesn't have air conditioning, but apparently air conditioning had gotten a few upvotes on that.
Okay. Very, very standard office stuff. So maybe someone who first time getting an office job and you got AC and it's nice. And
then of course you see the classic Reddit folks upvoting hot coworkers, even though that was only mentioned twice. It was upvoted
very
substantially.
Reddit. Yeah, I'm sure that one got upvoted, and then once you get the upvotes going, more goes, and it's a snowball. So there you go. All right, hot coworkers.
So anyway, interesting facts here on what the Reddit had to say about this post. So I just thought that was pretty cool.
This is cool. Great idea, Josh. Awesome analysis. Really cool. You guys put this together. That was fun to go through.
Yeah, absolutely. And so now we'll go on to the concerning things, and these are some pretty fascinating that's concerning section today. The first one being, this happened recently. From ABC and NBC both reported this. An IRS agent was fatally shot during a training exercise. Now, I don't know what your understanding was of what the IRS is physically doing on a daily basis, but I did not think that it involved needing, I mean, I'm sure every government official and anybody dealing with money and finance, it's good to be trained in weaponry, but it's interesting that this is something that you associate the IRS with. The FBI, yes. IRS, that came as a little shocking to me.
Do you remember when the last What was the last stimulus package that was passed where there were like 87,000 IRS agents were going to be hired coming off of that? I don't remember if it was a stimulus package or just a budget approval, but 87,000. And when they were recruiting for it, part of it was you get to learn how to use a gun. And people were like, what? Why does an IRS agent need a gun? I mean, my understanding is occasionally, an IRS agent they use a tax loophole to arrest someone, right? Was that Al Capone? They got him on
they got him on taxes. Yeah.
Is that one? So I don't know if you're like part of storming that room or whatever, or if the FBI takes over for that part of it. I guess if you're like on site at some raid like this, maybe you need a gun. But man, if you're behind a desk, getting your predictable paycheck, doing your spreadsheet thing, maybe automating some tasks here and there, really enjoying your coworkers, going through all the things you enjoy about accounting, I don't think you need a gun in that world. So I don't know, man. I hope it's like maybe some like siloed down special unit that goes on these raids and is like, no, I audited your tax returns. I don't know. This seems wholly unnecessary and clearly like too high of a risk. This is
I don't see, even if somebody was evading taxes or something, like you're going to get letters, then you're going to get subpoenaed, the whole, you're going to get served, whatever it is. The IRS is not, it's not like a like I'm thinking back to like tax collectors, like coming knocking on your door being like, pay up. Like that's not how it works.
No, you get letters and like if it's to the point where you're using tax and financial, conduct to arrest somebody, that arrest should be done by other people, not the IRS agents. They're not the ones storming a house saying, we got a warrant, get on the ground, blah, blah, blah. Like, that's not an IRS agent. I hope not.
Well, my suggestion to anybody listening is if you're young or if you have kids who are young who are interested in accounting, I mean, apparently the IRS has a lot more that they do than what you think they do. So maybe they could use some help.
Dig in a little bit more. And the importance of gun safety here.
Yep.
So like do the training for sure. This is really sad. I mean, we haven't touched on like somebody died. This is really sad that they were going through this. And like, just gosh, if you have a gun, please be careful, train really well on it.
Yeah.
Like the best gun owners I know are just all about safety. That's all they care about with the gun. So please be careful with your guns in the great state or great United States of America.
So just to touch on the special agent who had been wounded at the firing range, he'd been in the Phoenix field office his entire career, came up as a special agent and worked wide range of cases, everything from what you traditionally think of the IRS working, like white collar sort of tax investigations, all the way through narcotics investigations and some terrorism work with the FBI. So I think there's some interchangeability here in like once you're kind of in the system of the different departments that you can kind of rotate through. So perhaps there is some
That's
crossover.
What I was trying to get at, because like the jacket here, and I don't know if I want to take the picture too literally, but it says special agency on it, right? So is there a sectioned off group that works in a narcotics division or something like that? Like that makes sense if you are undercover with a cartel or something.
Right.
Maybe there's some small group that needs it, but the notion of hiring 87,000 IRS agents and teaching them all how to shoot guns feels wholly unnecessary and clearly too big of a risk for us to be doing that.
I was captain of my high school rifle team, and I am trained in my pistol license, and I'm trained and I have my own weaponry. And even I still am, I'm like, I am very careful, not from like, oh, I'm super careful. I'm like, no, it's an intimidating process to like shoot a gun. It's not like, oh, it's casual. Like I have them. Yeah. It's super easy, blah, blah, blah. I was like, no, it's an intimidating thing. I get nervous when I go to the gun range, even because I'm just like, I hope I don't mess it up because, if I don't load it properly, then that becomes a whole thing. It's just, there's a lot of regulations and protocol in place. And so,
and
for the faint of heart.
You know how to use a gun and literally the damage it can do and how challenging it is. And it's like, I've gone to the gun range as well. It's good to know how to use a weapon and how to respect it, because they're very dangerous, should be taken very seriously, and require a lot of training, and you got to really respect it.
So anyway, some sort of division of the IRS. I'm thinking the FBI would go undercover. Somehow the IRS is doing some stuff like this. Maybe it's just part of their training. Maybe they're actually doing undercover stuff. But definitely anybody out there, this is an interesting area to kind of like look into. Yeah,
during the interview process, digging deep. At what point do I get a gun?
Yeah. So another thing, which is from the concerning news, which is from Accounting Today, is the PCAOB permanently bars CPA firm Robbins. It was A.J. Robbins CPA.
Wow.
And this is just fascinating because obviously we're going through this whole true financial crime podcast that we're developing. We're talking about people being barred from being financial brokers, things like that. And to see a CPA firm actually get barred is pretty fascinating.
I see we have like the kind of technical reasons they
Yeah.
were
Yep.
banned. Do you know like any more detail behind the scenes?
Well, let's read these couple bullet points here from the PCAOB investigation. Between 2016 and 2018, the firm issued a number of audit reports and interim review engagements without first obtaining concurring approval for issuance from an engagement quality reviewer. It failed to conduct 2 issuer audits with due professional care and professional skepticism. That's interesting because I'm wondering how you evaluate whether somebody exhibited professional skepticism or not. And then both the firm and Robbins, who'd founded it and was the owner, failed to cooperate with the board inspection during 2018, improperly altering audit documentation and making misrepresentations to inspection staff. So this is one of those situations. I don't know the details behind the note, right, which started, it seems, this 2016 to 2018 period. Either it's getting lazy or not wanting to pay a concurring reviewer to get the approval. And then once you fall into that, then they're coming after you. And now they're trying to like forge the audit documentation of like, no, we followed all the protocol. And then obviously you just dig your hole a bit deeper.
Yeah. I would just love to know if there was a certain industry they focused on. Like what's I'd like to know if there's a certain industry they focused on. That'd be fascinating.
Yeah, I mean, the first thing the main thing that comes to mind with this whole thing is like, this is why audits are so expensive and why I don't think small firms can really do them, because there's so much compliance and procedures that you have to take. When you're in a big organization, like they've got the checklist down, it's going through the bureaucratic ladder, which is a pain, but is one of those necessary evils. And it becomes ridiculously expensive to have an audit, which is why it's no light decision to decide to try to become a public company, because it will be a major expense and a major headache. But it is necessary, and that's why they're super expensive, and that's why you have a lot of people with small personal tax practices, but you don't see a lot of people with small personal audit practices.
Yeah, totally.
So,
oh, man, I'm like frantically trying to pull up their website here.
I mean, he's not going to be allowed to sign off on anything anymore. He's barred. I don't know if you get your CPA license revoked, but he can't practice, at least in this field. And he had a $150,000 fine.
CPA license revoked for this stuff. Yeah.
Yeah.
Yes.
So we'll figure out more of the weeds on that. And if anybody has any information, feel free to drop a comment on it or let us know, because we'd be fascinated to hear. But the final piece here is from the Wall Street Journal, and it's just about the rising insurance costs and that they're starting to hit, home sales. And this just got me thinking of the impact on accounting when it comes to specialization, again, in valuation, actuarial services, accounting for losses. There's a lot of pressure on accounting teams to accurately estimate things. And that's where the most gray areas of accounting lie. And you have all these assumptions. And it seems like the more frantic the world gets, the less predictable the world gets every single year, the more pressure there is going to be, and the larger this gray area is going to be for accounts to try to make assumptions and not look foolish. They want to impress, the people they're reporting to and not be giving bad news, but they also have an obligation to be honest, and you really don't even know what direction it can go in.
Mm-hmm. So on the insurance costs, there's certainly hit in California.
Right.
I know that, and I mean it's even mentioned here, but the wildfire risk. Like if you're anywhere close to a hill in Los Angeles, your insurance rates are going way up. And yeah, it's a bummer it's hitting home sales. And I do, as soon as insurance is unprofitable, they just stop doing it.
Yeah. So do you have any idea what happens then when that, like, if they just decide we're not going to insure it anymore, you just riding home free and you're just
taking the risk. I mean, if no one will offer you insurance, then there are like specialty shops where they'll do it, but the prices get nuts to the point where, at what point is paying my aunt was just saying she has a house over in Monrovia at the kind of base of the mountains, but she's far enough down to where there's a wildfire, like her house wouldn't burn. It has to go deep into the city of LA to like really do anything serious. But she said her her fire insurance just tripled this year. And they basically said, like, no, we're not negotiating, take it or leave it. And we might not even be here next year. So take this while you can. And so she's like, not in a position to spend whatever it would cost to rebuild her house, and just has to pay the fire insurance and then hope that they come back next year and like still offer it. But yeah, it's one of those deals where you don't have a bunch of people willing to do it either. So it's kind of a price fixing.
Sure.
I don't want to say price fixing, but there's like a cost of doing business as an insurance company. You want to profit, you got your actuary, you put through all that kind of stuff and arrive at some price. But this goes back to like, I don't know, why insurance is so challenging, because at the end of the day, like, everyone paying insurance by definition is losing money because the insurance company is making money. And so but you have to be in a position to be able to afford to replace a house if you lose it. So it's such a tricky proposition. It kind of kills me.
I saw an interesting quote. Insurance is essentially hedging against your own well-being.
Yeah. And do you know Scott Galloway?
No.
Prof G is what he goes by, Professor Galloway.
Okay.
He had a talk recently where he was saying, he's like, I'm in a very fortunate position. If any serious medical challenge occurs in my family, I can afford to cover it. Like, it is what it is. He's an entrepreneur. He's a professor at NYU and the MBA program there, and he's made a ton of money for himself. He goes, I canceled my family's health insurance policy, and I realized that it cost me $50,000 a year for self-insurance for the four of us to get like the good plan that he wanted. And so my overall logic was, if something happens 1 out of every 5 years, do I have $250,000 to be able to cover that? He's like, yes, I have the $250,000 to do it. So if the insurance company is making money, I by default am losing money. So why would I do that? But you have to be in a position to be able to take on the risk of covering a major medical expense to do that. If you're not, you're getting like kind of ripped off every month, but it's a hedge against your well-being. Yeah.
I had this exact thing happen when I bought my car in California. And they're like, oh, well, do you want to pay the step-up insurance to cover the car fully in the event that it gets totaled? And I was like, so I did the calculation. Of course, the economy is like, I'm like, wait a second. So at first he's like, oh, you definitely need it. You're in LA. And I'm like, oh, okay. And as he's like filling out the stuff, I'm like doing a calculation in my head. I'm like, wait, if I spend this, because it's basically the true up, because the interest rate was super low at the time. So the cars were costing more than how much they actually were, the MSRP was. So the goal was to make up that difference. And I calculated it out and I was like, well, at the end of the day, if I never get in an accident the whole time, I just paid for it, even though I didn't need it. And he's like, yeah, but in the event that you do have an accident, then it'll be covered. And I'm like, yeah, but I'm still going to have to, like, at that point, I'm still going to have to just pay the same amount for the new car. So in one event, I'm definitely not going to have the money. And in the other event, there's a chance, as long as the car doesn't get totaled, I'll get to keep the money.
So you're basically today committing to the liability of totaling the car, and then you're going to pay it down over the course of some number of years.
Yes.
Yeah.
And
you passed on that, right?
Yeah, I passed on that. I was like, no, I'll just buy a new car in the event, and maybe I'll just end up getting a cheaper car if I can't afford the full car. But that was just a fascinating
another option.
But this is all the stuff that's like, and I got to give the shout out to accountants here, and the accounting brain is like, I take a lot of pride. You talk about what do you love about accounting? I take a lot of pride in having that like audit, detective, analysis, accounting brain that like thinks of the note beyond the note. And so many things people just include, they write it off, and then you start to think, put two and two together, and you're like, that actually doesn't make sense. But most people don't know.
You really need this, Drew, until you run the numbers. And good to be an accountant. You just saved yourself $10,000?
Yeah, basically.
Probably. Yeah, delta of a car.
It's like crazy. So anyway, finishing things up here with our favorite section, how should we account for memes? And this
My favorite meme so far.
This time it's less of a meme and more of a me. No, this is one of the ones this is a clip that I think a lot of the meme accounts have been on summer vacation because there hasn't been a heck of a lot of content churning out. But FloQast Studios, we're churning out content. So
those influencers make so much money. They go on vacation for all of August, just like Europe. So.
Yeah, or maybe they're all part of the Writers Guild, perhaps.
Good for them. I doubt. When did the guild start accepting meme writers? That would be something else.
That would be pretty funny.
They should. They're very popular.
That would be funny. So here, I will share this tab over here, and we shall take a little look. Hopefully, you're able to listen in. We all know that one friend who secretly loves being miserable.
I mean, work's been a grind. I was in the office till like 1 a.m. last night.
That's awful.
I don't know if you guys saw actually on my Snapchat, but like I was there the whole night. I didn't even go home.
Honestly, I just think he loves being miserable.
I get it. Right?
Sorry I'm late, guys. I was at the office.
Dude, aren't you supposed to be at your honeymoon?
Oh, I let her go on her own. I was just had to clear up some review notes for a client. So what are we talking about?
He literally can't stop bragging about how much he works.
Yeah, and then we had to call animal control, and basically they said the only option for us was to put him down.
Yeah, it's super stressful. Do you just mind if I just work while we're having the convo? You can keep going.
I don't know if he's actually doing any work.
Yeah, I'm always sending snaps super late night at the office so everybody sees how late I'm working and how miserable I am. But that might be why I never actually get any work done.
Nice.
Yep.
There are, people do the click clack at their computer, just wailing away, feeling productive, like they're getting stuff done. But not, I can't. You're not like that though. Let's take it out of the meme and go to real life. I feel like you get some stuff done.
Oh yeah. I mean, this is
I
not
hope you
this.
do.
This is Mike. I'm an actor. I'm playing a role.
Right. Drew the dynamic CPA. My bad.
Yeah. Yes. I'm playing this character of inspired. It was funny because I had a bunch of friends text me after they saw it, and it's like, some of them were like, "Are you talking about He Show Should Not Be Named or whatever?" And I'm like, "Yeah, that's who I was pulling on my inspiration from." And I sent it to my old public accounting group too, and they're like, "Yep, that describes me accurately." Not
Nice.
me, but they're saying that about themselves. So I pulled on a few different people who I know and kind of built that character around them.
And is that a thing with the kids these days? Send Snapchats around? How late you're working, stuff like that?
This was, I mean, definitely while I was in public. I mean, I think Snapchat's kind of cooled off a little bit now. I don't know how many people are still actively on it, though I do have some streaks that have lasted a couple of years. But
right.
that's just the OCD in me of just like, well, I can't break the streak. So until the streak's broken, like I have to keep on with the streak.
I have no idea what you're talking about. What is a streak?
Oh, this is a great social media, get people to engage with your platform. It incentivizes you to use it every day. And so as long as you use it every day, there's a little fire that counts how many days you've consistently used the app. So every day you send a snap to somebody, it shows you your relationship with so my cousin's fiance and I, we've sent a snap to each other every day for the last 425 days.
That's some great gamification by Snapchat there. All right, shout out.
And so, good job on them for figuring that out. But yeah, as far as this goes, I mean, it is true. A lot of the times I think there are people, and this is not just an accounting thing, this is just working in general, is people get caught up with work and then they want to brag about how much they work. It's almost like being emo. You get a weird sense of pleasure out of being miserable, and they showcase it to the world, and it's like, that's why I'm not getting a work done. I'm too busy telling everybody how late I'm working as opposed to actually accomplishing the work. But it's a sad truth.
Mm-hmm. Becomes some people's existence and what they want to talk about.
Yeah. But that about wraps things up today on the concluding cycle. So anybody who was at home who didn't have the opportunity, who's just listening, that video is at FloQast Studios. If you go on our page, there's a miserable coworker video, that one friend who brags about how much they work. So go check it out. Everybody who got to watch it along with us, I hope you enjoyed. And then, this has been a great session, Mike.
Yeah. Drew, do you think we elevated accounting?
I think we did. I think, there was concerning things that happened in the industry, but I think overall, the Reddit sums it up, right? What is it that you love about accounting? And even by accident, we talked about the things that inspired us or that we feel proud of for being accountants. So I think it's definitely an elevating type of day.
And I'll say today's talk, I thought was a good macro reflection on what's going on in accounting. We started off with a bunch of new work being put on accountants' plates.
Mm-hmm.
FASB's coming out with this. You got to segment this. So now there's more work that has to be done. We're talking about how much time we're wasting in meetings, $2,000 a year. Then we talk about what people enjoy. They enjoy the predictability of it. And one of the big ones here is automating tasks. And I think when you look at, the reason I say it perfectly summarizes what's going on is there's a big fear that AI is going to automate accountants. I don't think that's going to happen. I think it's going to take a lot of work off our plate, but more work is coming at us. Accounting doesn't get any easier. They're always adding new regulation, new guidance, more transparency, more clarity, more consistency, all that good stuff. So the workload goes up. We know the number of accountants aren't going up in concert with that. And so what do we have to do? We have to automate work. We have to automate tasks. And it was really encouraging to see close to 20% of the upvotes we got were really big fans of automating work, because that's going to be a big thing going forward to take on the new regulation that's always going to get thrown at us by the FASB, SEC, or whoever it is. It's going to keep coming. So it was nice to see all the positivity around accounting, what people like, and I think they're going to get more of that going forward too.
Yeah. And by automating all those mundane things, you get to do more of the figuring out that gray area stuff. And that's where you really need the human brain to think and factor in all the different elements and come up with some of those valuation things, which is exciting. So yeah, you summarized it well, Mike. Well done.
Yep. Thanks, Drew.
All right, everybody. So I hope you guys enjoyed this episode of the FinTech Flo. We'll see you next time.
Thanks for checking out the FinTech Flo. As a reminder, this episode is available for CPE credit, and you can get that at FloCademy or on the Earmark app. Details are in the description below.